Hello and welcome to our talking points today, where we strive to share valuable information with savvy investors. Now, Andrew Carnegie famously said that 90% of all millionaires become so through owning real estate. And that is exactly what the foundation of the Wealth Masters Club is all about. We want to help you to become successful property investors, but the best part is that you can do it using other people's time, money, and skills. Now, if you want to learn more about this, then stick around to the end of this video. Now, one of the most important factors of any kind of investment is you need to understand the trends of the market. You need to know when to buy, what to buy, and most importantly, how to buy. So to talk a little bit more on this topic of the property trends, I've invited our resident property expert back to talk with us. And that is, of course, Emile Grobbelaar, who is going to be taking a little bit of time to share some more information. So, Emile, thank you so much for taking the time to join us today.
Hello, Damien. It's a pleasure. Nice seeing you again.
Great. Now I'm going to jump straight into it. We obviously talk about this a lot, but what are the cycles in real estate? It's important to investors to know how and what, but can you tell us a little bit more about that?
Yeah, Damien, the cycles itself for investors is very, very important. If he carries that knowledge, he knows when to buy, when not to buy, when to prepare, for the next cycle to buy property again. So that knowledge will obviously give him an advantage above other investors. He won't buy the wrong thing at the wrong time. And obviously one of the biggest sins that there is overpaying for a property. You will recover from it eventually. Property is very patient, but it will take you a few years. It won't cost you much more, but you will not have the benefit of that very, very good investment that you could have made if you have made the right decision at the right time. So the knowledge of the cycles, when the market is up and when the market is down, is very, very important. And that we call either being a buyer's market or a seller's market.
Emile, funny you should mention that, because this is one of the topics or words that have been used a lot, is buyer's market, seller's market. What is the importance of that to the investor? And can you just elaborate a little bit more on what that actually means?
Well, the seller's market, obviously the advantage lies with the seller. The market is strong, meaning that there's a lot of buyers out there that can afford to buy. So he doesn't need to negotiate on price. When the property price is set and he feels that that is what the value is, so that is obviously what he wants, and he gets lower offers, he can decline it. He knows there's a buyer out there that will buy it in a short period of time. Obviously, that is a very important factor in that market. Whereas the buyer's market is where the power lies with the buyer. Meaning there's either oversupply of property in the market and not enough buyers, and the buyer can actually go in at a much, much lower offer than asking price. And because the seller is struggling to sell, there's not many people out there perhaps that can afford it or looking to buy at the moment, then he's got to drop his price if he wants to sell. So the power lies with the buyer, and that is what we call a buyer's market.
Now, Emile, obviously people will be watching this in the future. So for reference, it's mid-April 2022. What is the market like at the moment? What is the market that we're currently in?
Damien, it's a bit of a mixed bag. Everything that happened the past year or 2 years or so. And one of the big reasons is the migration out of the inland cities in South Africa to the coastal parts of South Africa, remote working, for instance, as well. So in Gauteng, most parts of Gauteng, they experience a buyer's market. There's a lot of property on the market. People are buying, it's affordable. The prices are low enough. Interest rates are low enough. They can afford to buy, and there's plenty to choose from. So there they can make an offer on a property. If it gets declined, they carry on. They will find something else to buy. Whereas in the coastal cities, it's a seller's market at the moment. People are moving down to the coastal cities. The demand there is strong. So the property prices are maintaining and growing. Buyers do buy because there's so many of them. And that is why it is a seller's market. The seller doesn't need to go down on his price and his property is selling. So it's a bit of a mixed bag depending on the area in South Africa where you are.
And then Emile, you also now just spoke about the semi-migration, and a lot of people are doing remote work. Obviously, that's having an effect on the market and the cycles. So what about the interest rate that went up by 75 basis points in the last month? How has that affected the markets?
Oh, yes, Damien, definitely. That is one of the big factors that influence the cycles going up and down. But yeah, we obviously expect the interest rate to keep going up. And when that happens, unfortunately, there's a lot of people that bought while the interest rates are low. It's going to become more and more difficult for them to repay that bond. So it gives opportunities to the investor. If the interest rates goes up, properties, people will be forced to sell because they can't afford it anymore. And the investor, if he's ready to buy, he will be able to buy good deals again. Very well priced properties, good value. So that is a cycle that will be advantageous to the investor. Unfortunately, not for the public out there. For their personal home. If they can't afford it, they need to sell it, and that's never nice. But for an investor, if he knows that cycle is coming because interest rates are going up, then he can prepare for it. And yeah, that is saving money for deposits, refinancing property to get deposits to buy, and ensure that he shops around when that happens. And I think with interest rates going up slowly but surely, we'll be moving in that direction.
And then Emile, just the last question. If the interest rate does keep going up, like you mentioned, what should the investor do?
Well, first of all, that is an opportunity to buy very good cash flow properties, i.e. second-hand properties, because the pricing is negotiable. Income on the rental side will be good. Demand for rental property will grow as people sell. They need to rent. They definitely need to live somewhere. That is why we invest in residential property, as you know. But also, at that point, because we do refinancing a lot, and that we do it in high capital growth properties, i.e. your new developments or the areas with high capital growth, then at that point, we will start alternating between the type of property we buy. Right now, because interest rates are still relatively low, the new developments are cash flow positive, or at least with a very, very small negative cash flow. But at that point, the negative cash flow will be very high. So we will continue buying, but we will alternate the negative cash flow new development property with a second-hand property that provide the cash on a monthly basis to cover the shortfall of the new development property. You want to continue buying your new developments because of the refinancing cycle that you want to go into. Obviously, if you have seen some of our webinars previously, you will know why it's important to do refinancing and why we do it so often. But right now, we focus on new developments because of the cash flow component going together with the capital growth component. And then later on, we will start, as I mentioned, alternate between second-hand positive cash flow and new development properties.
And then, Emile, just one more thing. I know I said last question, but I was tricking you there. You mentioned the positive effects of buying from a new development. And obviously, SARS has given some initiatives to investors buying off-plan developments as well in terms of SARS rebates. Could you just give us a little bit more information about that? Because I think very few people actually understand that benefit to them.
Yes, Damien, that is a very, very good question, a very important one, never to be forgotten by an investor. The 55% tax rebate or tax deduction that you can claim from SARS actually doubles your return on investment. 55% of the cost of the property can be claimed back from SARS as a tax deduction over a 20-year period. So if you buy a new development at, let's say, 7% net ROI, then it suddenly changes to 15% if you take that calculation into consideration. So very, very important. I mean, it's a struggle to find a second-hand property that gives you that ROI. So if you are looking to buy a second-hand property as an investor right now, I wouldn't buy anything less than a 12% net ROI. So that rebate from SARS is very, very important and never to be forgotten. It really doubles your return immediately. And if you take into consideration the amount of money that you might have invested in the property, I mean, I've done some numbers on it, and I usually work on a 20% deposit. And I've done the calculation on an 800,000 Rand property with a 20% deposit, 160,000 Rand, 6% capital growth, which is very low. And I ended up that the return on investment, taking into consideration the 55%, the 6% capital growth, the 8% ROI on the property with regards to the rental income, and it ended up with a 42% return on the cash that was invested by the investor. Now, there's nothing that beats that. And that is the real effect of that 55% tax claim that can be done through investments in residential real estate.
Fantastic. Emile, thank you so much for your time and amazing information. But I think the most important thing for people to understand is we've got them quite excited about investing in property and all the benefits of it, but it's important to be doing it in the right way, using the right structures to make sure that you, your family, your future generations are kept safe and that your assets are also kept safe. So as I mentioned in the beginning, you also can learn about how to become a successful investor using other people's time, money, and skills. And to do this, you simply need to register for our free online training, which takes place every weekend. And we have put the link in the description below. So click on that, watch our training. It's a couple of hours for your weekend. And I guarantee you're going to learn so much on that that'll put you in the right frame of mind to become a future millionaire. And if you already have a property portfolio, I think it's going to open up a lot of avenues as well for you to see how you can further save and protect your assets through the right structures. So we'll see you all again next week. But for now, thank you, goodbye, and we'll see you soon. Keep safe. Bye-bye.